Okay, everybody, in this video, we're going to finish off our worksheet. So last class, we had completed this worksheet in class. If you were in person, or last video, we would have done this worksheet in the last video. And so we did these adjusting entries for A, B, and C, and we talked about them, and we got our ending adjusted trial balance. So this is where we are now. So there was a previous video out there getting to this portion of the worksheet, and then now we're going to complete this part, the income statement and balance sheet part. That's in chapter 4. So that's why it's broken out this way. So now we'll complete this worksheet. So we're going to go ahead and break out what belongs in our income statement and what belongs in our balance sheet. Again, this worksheet is an internal document. It's just keeping us organized, and it's helping us make sure we really balance before we do these financial statements that we're going to give to management, right? We want to make sure everything balances and looks good and looks correct before giving to the managers who are going to make decisions based off this information. And we also don't want to be embarrassed by having debits not equal credits or something like that, right? So we want to make sure everything's in balance. Okay, so it's our internal document to double check. Well, we can see here this column is just asking for the income statement. So where my yellow arrow is, I'm going to put in my debits and credits just for income statement accounts. Well, we know that all these beginning ones, those are balance sheet accounts. So we're not worried about them. So we can see here service revenue and for expenses. Those are income statement accounts. So that's all I'm putting in this column. Well, our first one is service revenue. That has a balance of a credit, right? That makes sense because that's the R in dead curls and our mnemonic for remembering debits and credits. And so we can see we'll have a credit there, and we'll bring over all our expenses, and those are the debit balances. I already put in formulas here. So if you have this worksheet, you already have the formulas in, but you can do whatever fancy thing you want. I just did the sum of the columns. We're not in balance. That's okay. This is our income statement. Okay, well, let's look at this. Let's move that out of the way there. Okay, we can see here that revenues are more than expenses, right? So we have a greater revenues. That means we have net income. Revenues are greater than expenses. That's net income. So let's go ahead and put the difference on the debit side so we can balance and have debits equal credits. And we'll go over this when we do the balance sheet, and we'll see that this will work out. So hopefully it will work out. But let's just do this for now, and then when we get to the balance sheet, we'll talk about it. So, let's be formula-y, okay? So this one minus this, right? 17,500 minus 6,000 gives me net income of 11,500. Hey, I have balance. My debits equal my credits. Happy. We'll talk about the other side of that credit of this debit that we just did here. This is an internal document to make sure we balance. And uh, for sense wise, oh, it should be a credit, right? Because net income increases equity. Equity's balance is a credit. So we should have a credit on our balance sheet to increase it, right? So we'll get to that in a minute. Let's go ahead and plug that in here, and we'll see that we balance. All right, let's go ahead and plug in our balance sheet items. So the first one we had was a debit for cash, 300 bucks. Office supplies, 300 bucks. Don't get tricked. Don't look at that far right, left one, I mean, right here, right? And then 20,600. And then we have our credit for our contra asset, right? The think contrasting, so opposite of the normal assets balance of debit, that accumulated depreciation is no balance as a credit. 500, okay. 800, 2,800, and common stock, and we're done. I see a lot of students will keep going. Don't get carried away. This service revenue, that's part of our income statement. We already recorded it. We only record our balance sheet ones. Okay. Hey, there's our total for credit, our total for debit, and you can see that I said, okay, well, net income was 11,500. That increases equity. So I said, oh, well, I did a debit here. I got to do a credit here. That's fine for my internal document. And we can see actually my debits and my credits equal. So we're good. We're happy. I balance. I got everything organized, everything's in the right spot. I am done with the worksheet. I can actually piece out this to make my balance sheet. So my balance sheet would include all these items here. And then my income statement would include these items. Okay. The balance sheet's also going to include, if we were to prepare my statement of retained earnings, it would also include my retained earnings as well. But we can see that internal document at least helped us get the net income statement started. Then we'll prepare our statement of retained earnings. We can see there's no dividends here. There's no beginning balance for retained earnings. So it's just going to be net income. And then go ahead and prepare your balance sheet and then add in that retained earnings amount, which would, in this case, going to end up being 11,500. Okay, so that is it for this video. And that was a good short video for finishing up that worksheet.